A new year brings new opportunities for investors to punch their ticket into the greatest wealth creator in the planet, the stock market. Did you know that in 2021 the benchmark S&P 500 went up by 27%, with the widely followed index raking up almost 6 dozen record high closing prices? Well, if there's one constant thing that Wall Street holds, it is the fact that there's always great deals to be discovered. Wall Street never disappoints. Before we run through a list of the top stock market to invest in this year, don't forget to subscribe to this channel for more eye-opening videos. These top 10 stocks in the market are a mix of growth, value, and income plays that possess great potential to make you a lot richer in 2022. We'll first be kicking off with NEXTERA Energy as the first on the list. After watching the growth of stocks soar in the past years, you might be having this urge to invest in an electric utility stock. Although the idea might sound laughable, don't ever underestimate the potential of NEXTERA Energy. This particular stock has delivered a positive total return to shareholders in 19 of the past 20 years. For those familiar with the growth of most electric utilities, you can testify that their growth is usually at a low single-digit rate. But contrary to this common trend, NEXTERA Energy has been consistently averaging high single-digit as a result of its aggressive investments in renewable energy. No single utility in the country is currently generating more capacity from wind or solar than NEXTERA. Nevertheless, NEXTERA Energy is not reducing its aggressive investments in renewable energy anytime soon, with the company investing an aggregate of $50 to $55 billion in new infrastructural projects between 2020 and 2022. This is a very smart investment with lending rates at historic lows. Meanwhile, the company also benefits from the cash flow transparency of its traditional utility operations. I'm referring to those not powered by renewable energy. Since the traditional segment is regulated by state utility commissions, it means no exposure to potentially volatile wholesale electricity pricing. NEXTERA Energy is a good pick for potential investors. Another top pick for the market is Novavax, as we'll be looking at it now. For investors looking out to grow their wealth, biotech stock Novavax can be their ticket to better financial freedom in 2022. Novavax is one of the more than dozen drug makers working to create treatments for COVID-19. The company's vaccine NVX-CoV V2373 was stellar in 2 large-stage trials in 2021. The UK and the US or Mexico trials produced vaccine efficacy rates of 89.7% and 90.4% respectively. As one of only 3 prominent vaccines to reach an efficacy of 90%, there looks to be a clear path to Novavax becoming a major global player in the fight against the COVID outbreak. Furthermore, investors were able to buy into Novavax relatively cheaply after the company ran into several operational halts last year. With Novavax beginning to receive emergency use authorizations around the world, and they're also expected to launch NVX-CoV 2373 in numerous key markets this year, it's a good wager that this will make investors rich. The next top stock in the market to look out for is the WALGREENS Boots Alliance. This particular stock will interest investors that appreciate value stocks. Pharmacy chain Walgreens Boot Alliance, with its forward year price to earning ratio of 10, this is a company with all the tools needed to make you richer in 2022. Although Walgreens experienced some lag due to reduced foot traffic during the initial stage of the pandemic, the company's multi-point turnaround plan is already well underway and set to pay big dividends this new year. For example, the company was able to achieve over $2 billion in annual operating expense reductions a year ahead of schedule. All the while, it's been aggressively spending on digitalization initiatives designed to encourage consumers to purchase products online for delivery or pick up via drive-thru. Even though online sales represent a small portion of total revenue, this is a segment with sustainable double-digit growth potential. Arguably the most exciting thing in the Walgreens that has partnered with VillageMD to open roughly 600 full-service health clinics located in its stores in more than 30 US markets. These clinics can funnel residents right to Walgreens' high-margin pharmacy. This is a kind of stock to watch out for closely. Another top player in the stock market to look out for is Amazon. And this is one of the best breed of stocks. Amazon is a good bet to make investors richer in 2022. Amazon is a leader in not just one category but two. Investing in stock need no hesitation. It's a no-brainer buy. We all have an idea of the degree of Amazon's dominance in e-commerce. According to research, Amazon accounts for an estimated 41.4% of all online sales in the US in 2021 alone. But on the other hand, the company's 20 million global Prime members are also the ones fueling the fire for this segment. The annual fees Amazon collects for its Prime users help signify its success, and it's also what allows it to undercut physical store retailers on price. What you might not notice is that Amazon is also a leader in cloud infrastructure services. Amazon Web Services accounts for close to a third of all global cloud infrastructure spending. The important thing to recognize here is that cloud services, along with advertising and subscriptions, are Amazon's fastest growing and highest margin segments. As long as these segments continue to grow rapidly, Amazon's share price and operating cash flow can head significantly higher even if growth in e-commerce revenue slows down dramatically. PubMatic is another top stock in the market to invest in. PubMatic is a small cap stock that is good for investors who are looking out for top stock with a higher risk or reward profile to invest in. PubMatic wouldn't be a bad choice for such an investor though. It also operates a cloud-based programmatic ad platform that is a sell-side provider. In simple terms, this means its software handles the optimization of digital ad placement, with the company selling display space for publishers. Though publishers do offer inputs such as the minimum price they'd be willing to accept to sell display space, PubMatic handles everything else. The platform's machine learning algorithms are designed to put relevant ads in front of users while also maximizing what publishers net from advertisers. The beauty of the PubMatic operating model is that advertising dollars are shifting more and more to digital platforms, whereas global digital ad spend is expected to increase by an average of 10% annually through mid-decade. PubMatic's sales growth has consistently doubled up this forecast, and it has averaged an organic growth rate of up to 50% in 4 straight quarters. If that's not a big endorsement of its sell-side platform by publishers, I'm not sure what else is. The next top stock for potential profit for investors is the Annaly Capital Management. Annaly Capital Management is a perfect stock for income investors. It can make you richer with top stocks in 2022 as well. Mortgage Real Estate Investment Trust, or REIT, Annaly Capital Management offers an inflation-crushing yet sustainable 10.9% dividend yield and has averaged a yield of roughly 10% over the past 2 decades. Just know the mortgage REITs like Annaly aim to borrow money at lower short-term rates, which can then be used to purchase higher-yielding long-term assets such as mortgage-backed securities. When you subtract the average borrowing rate from this long-term average yield, it produces what is known as net interest margin. During the early stages of an economic recovery, it's very common for the interest rate yield curve to steepen. I'm talking about the gap between long-term and short-term treasury bond yields that widen. When this happens, Annaly usually sees its net interest margin rise. In addition, Annaly also buys agency assets that are backed by the federal government. This single act allows the company to judiciously use leverage to its advantage. Next up is the United Health Group. Another top stock with a long history of providing better promising profits to its shareholders is United Health Group. It has provided a positive total return for shareholders for 18 years out of the past 20 years. United Health Group is best known for providing health insurance. While insurance isn't a fast-growing market, it does provide the company with transparent and predictable cash flow. It also doesn't hurt that insurance companies usually have strong pricing power when it comes to increasing premiums to cover their expenses. However, United Health's key operating segment isn't insurance, it's Optum. Optum handles pharma care services, providing healthcare software, and offers other high-margin health management services for hospitals and clinics. Optum is growing much faster than the insurance segment and is capable of much higher margins as well. Another big stock to look out for is Ping Identity Holding. When looking for double-digit growth trends, no one looks safer than cybersecurity in 2022. This is why Ping Identity Holding is on our list of potential stocks that can make investors richer this year. As its name rightly suggests, Ping's cloud-based platform focuses on identity verification for its clients. It also leans on artificial intelligence to grow smarter and recognizing and responding to potential threats over time. Ping's platform is especially useful when layered atop on-premises solutions, where it helps by continuously monitoring and improving user activity. The great thing about cybersecurity solutions is that they offer exceptionally high margins. In Ping's identity case, The company is shifting its client base away from term-based licenses to software as a service subscription. This should ultimately improve customer retention rates, lift margins, and sustain the company's double-digit annual growth in recurring revenue. Ping is one of the best values in the cybersecurity space today. The next on the list is TRULIEVE Cannabis. US marijuana stocks look poised to bounce back in 2022 since its buzzkill in previous years. The US multi-state operator or MSO TRULIEVE Cannabis is one such company that can lead the charge to its revival. Unlike most MSOs, TRULIEVE has uniquely approached its expansion. They carried this out by primarily focusing on a single market. As of last week, the company had 160 operating dispensaries nationwide with 112 stores in medical marijuana legal Florida. Saturating the Sunshine State has helped TRULIEVE gobble up approximately half of Florida's dried flower and oil market share. More importantly, it has kept marketing costs down, which has allowed the company to report 3 consecutive profitable years. TRULIEVE's next chapter was written when it closed its acquisition of Harvest Health and Recreation in the 4th quarter. MSO Harvest Health had a leading presence in Arizona before its acquisition, which clears the way for TRULIEVE to become the dominant player in yet another billion-dollar cannabis market. What a great opportunity for investors to bank on. Lastly, we'll be looking at Meta Platforms, a big stock raving in the market. Meta Platform stock is capable of making investors rich in 2022. Meta is the parent company of social media platforms Facebook, Instagram, WhatsApp, and so on. If you want to see what dominance is, just pull up Meta's monthly active users or MAU count across all its platforms. In the 3rd quarter, 2.91 billion people visited Facebook each month, with another 670 million unique users visiting Instagram and WhatsApp, which Meta owns as well. These 3.58 million MAUs represent more than half of the global adult population and are the precise reason advertisers will pay through the nose to get their message in front of this vast array of viewers. Beyond advertising, Meta is also a play on the metaverse, the next extension of the internet that allows users to interact in 3D environments. The company owns the popular Oculus virtual reality devices and invested $10 billion in metaverse-related projects in 2021 alone. A forward-year price-to-earning multiple of 23 is too expensive for a company with a growth rate exceeding 20% and this many competitive advantages. Thank you guys for sticking to the end. Let us know if this video was helpful to you in the comments section. And for those of you who are new to the channel, please don't forget to like and subscribe to this channel. Thank you so much for watching.